Welcome to About Money, a different approach to investing you won't hear anywhere else. Your hosts, the AFC team, Mike and Al, are registered investment advisors who have a proven track record of managing long-term investments surpassing the markets. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's your AFC team, Mike and Al.
And it is Saturday, and we're going to be talking about money. This is The Answer About Money. So India, the population of India is now past the population of China. And if you look back, companies rushed into China in the last couple of decades because there was 1 billion people there. And with 1 billion people, it was a huge potential market. And with that, companies could sell a whole lot of lattes and airplanes and cars and books and whatever. So it was huge. But as that relationship with China has become more and more adversarial, and the population of India is surpassing China, are we going to see a shift from China focus to India focus? We're going to be talking about that. But the other thing that's gone on, the first half of 2023 is done. We're done. The Fed was raising interest rates. We've lived through persistent inflation. The yield curve is inverted, which says we should be in a recession. Fed raising interest rates, we should be in a recession. But if you look at the stock market, it's turned bullish. So are bonds right? Or is the stock market right? Or does it matter? That's coming later in the program. But let's begin with India. Al,
India.
Take us away.
Yeah, Mike, you just said that. Is India becoming the new place for America to invest in? And if we look at what happened at the White House last week, we had all the top tech CEOs visiting with Modi when he came. They had a state's dinner, which they don't do very often, Mike. It's rare. They think it's only 3 times they've done a state's dinner and let visiting dignitaries speak to both joint house. I think it was Winston Churchill, and I can't remember who the other one was.
So, it seems to make sense that politically there's a focus. But what about business-wise?
Well, we saw Apple's moved and building a plant over there. 7% of iPhone are going to start to be built in India. There's a Taiwanese company that's putting $500 million into a factory that they're building over. And so it's definitely happening. India is definitely happening. But there's some problems with India that I'm sure China had years ago but doesn't have anymore. The poverty rate. India's poverty rate is about somewhere around 270 million. That's people living on less than $2.30 a day.
Yeah.
And compared that to China, China's about 70 million of living on less than $2.30 a day.
But India's made some significant progress, just as China did. India's lifted in 10 years from 2011 to 2018 or 19 or somewhere in that time frame. They lifted 200 million people out of
poverty. They have, absolutely. They've made tremendous strides, but they still have a long way to go in the infrastructure. I mean, they have some modern airports and roads, but they have a long way to go to get the infrastructure in place like China has. I think that Modi was investing somewhere around 1.4 trillion in infrastructure. I read that he's to build out roads and more airports and everything like that to get the country up to snuff with China. And it's interesting, Mike, if you look at it just geographically, because I just went and looked, because potentially in the next 20, 25 years, you're going to have 2 superpowers that close together, right? And when you look at it from geographically, you look at the United States, I mean, just thinking about, like, if we wanted to go in and take Canada, we could. If we wanted to go in and take Mexico all the way down to South America, there would be no fight whatsoever, right? Yeah. Not that we would do that, but I'm just saying, right? But then you look at China and India and all those little countries in between, but it's heavily of course, you got, huge mountains there and stuff like that, but they're going to be right next to each other. And there's already naval problems because they're running into each other in the Indian Ocean, and there's a lot of fight already over with China's having with other countries in the South Chinese Sea with Vietnam, and they're saying, no, we have rights to this for ancestry. So it's going to be really interesting as India comes up in the world, how that all plays out.
And it appears to be coming up. I mean, we talked about the escape from poverty. It reminds me in many ways, I had a client, it's been 3 or 4 decades ago, who was the plant manager for American Standard and transferred to Tianjin, China. Mm-hmm. And it was a plant that was going to make ceramic toilets, ceramic bathtubs, and ceramic shower stalls. And they started with 1,000 employees. And not one of those employees had ever seen a ceramic toilet. Or a ceramic bathtub or a ceramic shower stall.
Yeah.
And now they were going to make it.
Yeah.
10 years later, those people were buying cars. They were buying their food at restaurants. They were buying clothes. And today they probably all own smartphones. It lifted them up, and when the butcher pays the baker, pays the candlestick maker,
Yeah.
you get a significant multiplier effect.
And then that's going to happen. The problem in India, though, is that they have 200 million Muslims. They have Christians there, and Modi's regime is not real kind. Has not been real kind to those people. There's a lot of creating a lot of problems for him, and it could create future problems for him. The other problem is that they have a lot of highly educated people, but they have a lot of uneducated people too. And so their focus on the workforce is on the educated people, but trying to get the uneducated people and trying to get things going that way, manufacturing is going to be a challenge for him. And that's what he needs to do to really, like China did, to really get the country and lift more people into a somewhat middle class.
And the Chinese had those problems, some of those problems too. They had the Han Chinese, which were the major Chinese group, but you had the Uyghurs.
But what India has going for it demographically is that their fertility rate is still 2.2, with China's is 1.1. And they have a lot of young people. They're a young country. They're not an old country like China, where China has, as many elderly people as the whole United States. 300 million of them are, 65 or older.
And that ratio is meaning that the older people, there's going to be a greater and greater percentage of older people compared to younger people.
Yeah.
So certainly an advantage to India.
Yeah, but they only have, it's interesting, Mike, they only have 60 million people with formal jobs in India out of the 1.4 billion. So they have a lot of people that it's, I don't know what they consider unformalized work, but that's what they call it.
Yeah, I think I read somewhere that the 90% of the population makes $300 or a month or less.
Mm-hmm.
So, I mean, even though those 270 million or so that are in poverty make only, $60 a month, most of the people are stuck in that $300 a month. And to make it into the top 5%, I think that's around 45,000.
Yeah.
I mean, it's...
I don't know if these are issues, but they're from an American perspective, they have really close ties with Russia.
That's also an issue.
But they don't look at it that way. Modi looks at it differently. He looks at it as being a positive in the sense that he thinks that he can help smoothing out any problems that arise between America and Russia. That they went from buying 2% of Russian oil to buying 20% of Russian oil. Mm-hmm. As far as, what they're going to need to get to where they want to get to is energy. It starts with energy.
It does.
If you don't have the energy, then you're not getting. So right now, they only use like 11% of the world's coal, where China's using 50%.
Yeah.
So they're going to have to import. It's going to be oil and probably liquefied natural gas to get where they want to go, and building some green energy to get there.
But that means there's going to be factories that are built.
Mm-hmm.
Means there's going to be ports that are upgraded. I mean, there's a lot of capital structure that will go into India.
Yeah. Mm-hmm.
And a lot of that will be American firms participating.
It will be. I mean, they're going to be the fifth largest economy. They're going to overtake Japan and Germany. They think that, this is a study by Goldman Sachs, says to overtake Europe by 2051 and America by 2075 as far as GDP. That's the potential there, though, when you have 1.4 billion people.
Yeah, I'll probably not live to see that. But I mean, although that's only 40 years.
But their manufacturing, Mike, is up 63% in the last 5 years. The other thing that India has going for it that's good is that they have a really good reputation around the world. People that leave India that emigrate to other countries are seen as they're highly educated, and we see them here. The CEO of Microsoft, some people like that, and they hold in America they hold 73% of HB1 visas. From India. Yeah. And so unlike Chinese, they're seen as around the world as, somewhat not trustworthy. Indians have a really good reputation in business around the world.
So if I was an investor, what would you tell me are the 3 takeaways from this development in India?
I would say that there's going to be tremendous investment there, as far as we already see Apple going there. We're going to see our relationships tighten with them. And so will we bring high technology there? Will we sell them our high technology? Look for that, and then other technologies as far as food and grain and all that stuff. I think those are the things that and maybe heavy machinery equipment that will be sold there to grow that country.
And probably a lot of retail stuff too. I mean, Starbucks has what, 3 or 4 or 5,000 stores in China?
Yeah, and Apple just opened I think its second store there.
Yeah.
So yeah, there'll be a tremendous. There could be and that's the thing is that they're way more democratic than the Chinese economy. So there could be a huge market economy there.
And I mean, one of the issues with China is the government controls everything. Mm-hmm. And that's an advantage in building the economy to this point, but it now has become a negative and a stone around their neck. Mm-hmm. Don't go away. We're going to come back. We're going to still talk a little more about India, and then we're going to shift and talk about, are bonds doing it or are stocks doing it? Don't go away. We'll be right back.
About Money with your AFC team, Mike and Al, on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
We're just talking about India and their reputation. The Indians that, they call it the diaspora, the people who leave the country and go other places. Like in America, like I said, they hold 73% of H-1B visas. They're wealthy when they come over here. The average household income is $150,000 compared to the Chinese, which is around 90-something thousand that come over. And 80% of Indian-born population in America have undergraduate degrees, with 50% of Chinese students. And this just brings me to my point, Mike, is that are we going to trust India like we trusted China? We went in there gangbusters, right? And then what happened? They stole all our technology, all our stuff, and then built their own companies and said, okay, bye-bye, we're going to build it for ourselves. And that's where we came up with, the chip wars we're having now and saying, we're not going to sell you anything anymore because you're just going to steal the technology.
And do you think that will change with India?
I don't think anybody knows. I think the relationship they're trying to build, I think that America needs the relationship to have that stronghold in that part of the world, especially the competition we're having with China. I think Modi's popularity could be a positive thing for that. I mean, he's like the most popular politician in India ever in the world. And he's got an interesting background because he didn't grow up wealthy. He grew up, basically poor. And there was, the knocks against him were, well, he's just a tea salesman. They tried all those things, and it didn't work. It made him actually more popular. People took to him more. They say he knows how he's got the, Bill Clinton type. He knows how to really connect with the crowd and connect with people, and so people really take to him.
Well, and it's, when you think about what is the world population, 8 billion people?
8 billion, somewhere on there, yeah. So
that they have somewhere between 15 and 20% of the world population, and the potential for those people to grow into consumers, that's a significant market.
Right, but he's doing some things, though, that are as I talked about, there's a hostility towards Muslims. There's been like lynchings of Muslims and things like that in the country, and he's been eroding some of the structures. Not structures, but the the courts and stuff. He's been eroding some of the courts in the countries and things like that, which people are like, okay, if he's going to continue to do that, that's going to be detrimental because, as we've seen and we talked about in China a couple of weeks ago, is what's happening in China when businesses go over there. They're not sure if their capital is going to be seized or what's going to happen. We get people being taken to jail because you're spying or you violated our privacy agreements and stuff like that. The same things over there. People they're unsure if he's going to erode the court system of foreign investment to come in, and he's really out there selling the country right now, trying to get foreign investment. But if the systems of government are eroded, then that doesn't bode well for foreign investment because nobody wants to stick a bunch of capital in a country that they know it could be seized and I'm kicked out.
Yeah.
And that's an issue.
So are they looking for changes in that outlook?
They're looking for it, but they're not seeing it right now. They're seeing him being more hard-lined and more pro Hinduism, and I don't know the word for it, but Hindu, and so that with 200 million Muslims in the country, I don't know how many Christians are there, but there's 200 million Muslims. That's a significant number of people, even with the 1.4 billion. It could create some problems for.
But you had the same kind of thing happening in China at one time, and still happening with Uyghurs and some of the minor Chinese sects.
How many? Was that as significant as much a population? 20% of the population like that?
I don't think it's 20%.
Yeah.
But it's certainly not negligible.
Yeah.
So certainly you would like to have 200 million more people buying your product.
Yeah, exactly. But I don't know. It remains to be, to be seen what the outcomes will be and how the country will bring itself together, take in foreign investment, be able to build a thrifty working class to build these ports and factories and things like that, and then go out and having them spend that money in buying American products or Indian products and American products,
When you look at it, if you look at the Standard & Poor's companies, half of their revenues come from overseas. When you look at all the U.S. companies, 43% of revenues come from overseas. So having a huge market, a billion person market, and opening it up, that creates a lot of possibilities for growth. And while growth is, if you look at the GDP here in the U.S., GDP is growing at a couple percent a year and has been for decades. So 2% here means that companies, by developing markets in India and overseas, they can continue to grow at 15 or 20%.
Yeah, their GDP grew at 6.1% last year.
Yeah.
And they'll continue with as many young people as they have in the country. It's a huge opportunity. It's even better than China in a sense.
Yeah, it starts at a lower base, but I know from the example that I talked about earlier about my client that went to Tianjin, China. I mean, the acceleration in those incomes was dramatic.
Yeah. The only thing is the fertility rate at 2.2 is a good sign, but will that, as they become wealthier, will that drop off, right? And will they? But that's when we're years away from that.
We're years and years.
I mean, we're 50 years away from that.
At least 50 years away, and maybe 100 years before it really becomes an issue in India. So it's important to understand, as relationships with China become worse, there's an alternative.
Yeah.
So just having China begin to cut off American companies and American revenues, there's an alternative place that the revenues are going to come from.
There's going to be, asking with the three things that I think this is just look, there's going to be tremendous investment in India over the next decades.
Yeah.
And I can't say, which sectors. I think all sectors are going to want to participate over there. You'll have Procter & Gamble selling diapers. You'll have Apple selling iPhones and everything in between.
And that creates opportunities for investors.
Yes, it does.
Yes. Okay, let's shift, because we are the week of July 4th, and July 4th is a special day. July 4th, 2012 was a special day. Let me take you back to 1964. A physicist, Peter Higgs, proposed a theory that said there has to be an atomic particle that he named the boson particle. And as physics developed over these past years, theories grew up, theories about how things worked, about how physics worked, about all aspects of physics. And that particle became known as the God particle because its existence was fundamental to everything we knew about physics. If it didn't exist, what we knew was invalid. So on July 4th, 2012, 56 years after Higgs proposed this theory, they discovered the particle in the Hadron Collider, CERN. It's 500 feet underground. It's 17 miles in circumference, 17 miles around. It's like a huge electromagnet, and you put one particle in at one end, you put two particles in at one spot, and you begin to accelerate them in opposite directions so that they make that 8.5 mile circle till they meet. And the idea is to increase their speed to get close to the speed of light. That's the idea of the whole thing. And so they come together and they smash and they break apart. Think about what would happen if you took two cars and crashed them together, each one coming from a different direction at 500 miles an hour or 1,000 miles an hour. Think of where the parts would go every which way. That's the concept of that particle accelerator. And when those particles separated, and you take protons or neutrons and a few other subatomic particles, and you accelerate those. And when they break apart, what they found was the Higgs boson particle does exist. They were able to identify it. July 4th, 2012. That's fundamental to our understanding of physics. I can remember when I was in college, and that's been a long time ago. 1965, the front cover of Time magazine had the picture of the double helix and talked about Watson and Crick discovering DNA. And I was so young and dumb at the time. I thought, so what? So what? I mean, the fact is, you think about all the things that have happened in biotechnology and the increases we've seen. It's a $1 trillion industry, and we're just at the beginning of that industry. We're there so that we're just beginning to understand the biology of human beings and of living things. The point of all that is whether you're talking about physics or chemistry or biology, there are certain laws that hold. Once Peter Higgs proposed that there had to be a boson particle, if that had not existed, all the theories would have been gone. But because that particle exists, you can build up an understanding of physics. You can understand gravity, for example. Throw a ball up in the air, 10-pound steel ball. It doesn't just sometimes hang in the air. Throw it up in the air and it comes crashing down. At least unless you're in space. But, you know what I'm saying. Gravity exists and it's consistent. Geologists dig into mountains and they find and trace back what's been going on in rocks. So what does all this have to do? Hang on, we're coming to that and I'll tie it all together. Don't go away.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike and Al.
So July 4th, 2012, we discovered the Higgs boson particle. And I use that as an illustration because for physics, biology, chemistry, the laws hold true. It doesn't matter where or how, they're always going to hold true. Back in the 1920s, there was a man by the name of Irving Fisher. And just like scientists around him who were developing the laws of physics and chemistry, not so much in biology back in the 1920s, but physics and chemistry, Irving Fisher postulated that economics must be governed by laws. There must be things that always happened the same way. And he wanted to theorize how economies work, that they would follow the same kind of laws as chemistry and physics. Now, wouldn't it be nice if it was true? Wouldn't it be nice that we knew that when the Fed raised interest rates, we're going to have a recession? When the yield curve inverted, we're going to have a recession. Wouldn't it be true that we knew when certain economic conditions happened, we knew what the result was going to be? That it was like throwing a steel ball up in the air 10 feet, knowing a 10-pound ball is going to come crashing back to Earth?
Trying to guess what 300 million people are going to do in any given day.
That's the whole point. 300 million people, all with different backgrounds, all with different philosophies.
Mike, if you ever bought anything on eBay, You ever bought anything on eBay?
Yeah.
Yeah. You ever get in a bidding war with someone?
No.
You never have?
Nope.
Oh, it's an interesting psychological phenomenon. I've been in bidding wars with people on eBay, and they get so tied that they want that item. They will bid it up higher than I can go to Dick's Sporting Goods and buy it. Does that make any rational sense when the golf club cost $200 at Dick's Sporting Goods and a guy bids it up to $250 and pays $25 in shipping and handling?
No,
it makes no. There's a whole science that was developed off of that called behavioral economics, right? To realize that it doesn't work. There's a combination between economics and psychology that comes in play that says sometimes the psychology overrides the economics and people don't make rational decisions.
And behavioral economics and behavioral decision making is one of the things that's taught to financial advisors.
Yeah.
They're taught, make people like you. Don't focus on performance. When I was at one of the big brokerage firms, before I started Adams Financial Concepts, one of the mantras was sell the relationship, not the performance. It's all behavioral.
Well, funny, this lady I've been was talking to yesterday. We were it's on a different subject. She's helped me with some stuff on LinkedIn, and she was telling me about her financial advisor. And she said, well, he's not really a people person. We don't really talk to him. They don't really, it's like, okay, so you don't really like the guy, but they do business with him because he's good at what he does. I'm like, perfect.
That's perfect.
So.
I love my mother a lot. She's no longer with us, but her primary criteria was she wanted to love her doctor. It doesn't matter how good or how bad they were. And some of the advice was really bad, but he was their doctor and she liked him. So I have a brother-in-law in the same situation. They liked their doctor and so they continued to use the doctor. And I think for my brother-in-law's case, it's almost a case of malpractice, but can't say anything about it because they like him. And a lot of clients depend upon their financial advisor because they like them. If I pick a doctor, I want to be sure that he's the very best I can go to.
I want to argue with my doctor. He doesn't argue back with me. Then I'm like, nah, this ain't the right guy for me. No, because I'm the moron. I don't know anything about what. Right, I'm not a cardiologist. I'm not a endocrinologist. If I ask a stupid question, he doesn't tell me why it's a stupid question and all this stuff, and say, no, that's dumb, because then I'm like, that's his job.
Yep. And I've had doctors that had really poor bedside manner, but the skills they developed and the skills that they had, that's what I want with my financial advisor. That's what our focus has been. Not to be the greatest guys that people have ever met.
But we are, though, anyways.
We are.
Yeah.
Okay, now that you just say that. But think about what's happened just in the last 3 months. In March 2023, there were a number of traders that made trades which looked like they were a slam dunk. No question. How could you go wrong? I mean, when I was at that conference a month ago, same kind of thing. Slam dunk. You can't go wrong because you just couldn't miss. There were banks that were in trouble. Silicon Valley Bank, Republic Bank. The banks were in trouble. The Federal Reserve was raising interest rates.
The inverted
The yield curve was inverted.
Yeah.
So a recession was absolutely certain, right? Well, maybe not. So what happened is money flowed out of stocks and into bonds. Because bonds, you can get a nice 5% annual yield. So $42 billion flowed into ETF, short-term treasuries. $42 billion. $24 billion of that came out of stock mutual funds. So the idea was to get rid of the stocks, buy the bonds, get your 5%, and how'd it work? Well, there's no recession, and that 5.5 in 3 months has yielded 1.25%. The stock market, on the other hand, is almost 15%.
I saw a thing, Mike. I think it was a few weeks ago. Short sellers getting crushed on, I think Tesla, Nvidia, just getting absolutely $120 billion to $120 billion.
Yeah.
Had to go cover their positions because they thought, Microsoft, they thought these stocks can't keep going. Apple's just, close to $3 trillion this morning?
Yeah. It's what we live in right now is a time in which the market timers are getting crushed. They're looking at things which should happen. And if economics was governed by the laws of economics, like physics and chemistry, they would be making a ton of money. It would be a slam dunk to sell out of stocks. The conference I was at, the money managers managing billions of dollars were 15 or 20 or 50% in cash. Not going to get into the stock market because we know that there's going to be a recession.
I was listening this morning, Mike, on the way over. They said more people, they're putting, money managers putting more money towards short-term treasuries.
Yep.
They're going to keep, I think July, we're going to see a month where they pile into short-term treasury.
Which, for those people that are invested right now, when those people really begin to realize what's happening, that market flows out of treasuries into stocks.
But what happens though, Mike? It's too late, right? I mean, when that starts to take off again, they gain back, 30% within 3 months or a month or something. And then can you time it right and get in exactly when it hits the bottom and capture that early run-up?
No, but if we're in a bull market and if we're continuing a secular bull market, they'll still make money. The issue is they won't make as much as they could have made. I've gone to conferences where you have people that are advertising our clients make money. And I believe that's true. I believe that most financial advisors make money for their clients. The average financial advisor over that period of time from 2010 to 2019, they averaged around 5% a year. They made money for their clients. The issue is that the stock market was up 17% during that time. So they weren't anywhere close to delivering a performance that the clients could. It was to clients' detriment. Even though they were making money, and that's good, they weren't losing money, still, the opportunity cost of what they lost over those 10 years is they could have had twice as much money as they had, more than twice. So it's, they'll make money and they'll get into the stock market and they'll get into returns, which are positive. And since they've been in bonds, they probably won't be negative. Well, maybe, if interest rates get to 5% from the 3.4, they could lose that 5% and they could lose it very easily. An increase from 3.4 to 5% could put them down 10%. And so that 5% offsets some of that 10%, but they still lose. That's, on the other hand, for us, it's awesome because we are invested. We stay invested. And for us, it means that for every happy buyer, there's a happy seller. And for those people who are getting in late in the market, we can be selling to those people at a higher price than we bought.
Well, we've seen some of our stocks that we've jumped on that, people trashed, right? A recession's coming, we're going to trash these. They trashed them, and they've just they keep chugging forward.
I can think of one stock in the portfolio where they announced their earnings recently.
Great numbers, too.
And
yeah,
16 different factors that every single one was positive. And what happened? The stock sold off in the beginning, and now is what, 30% higher?
I think so, yeah. Yep.
I mean,
yep.
One thing that can be counted on is that stock prices depend upon earnings. And if earnings are increasing, stock prices increase. Anyway, we'll come back and finish this. Don't go away. We've got a lot more to say.
About money with the AFC team, Mike and Al on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
Brings me to a client that we have. A client he's been investing for a number of years. He was one of the early investors in Magellan, Peter Lynch's vehicle. Peter Lynch, over 13 years, averaged 29% per year. Now, that's not a compounded rate. That's an average rate per year. But that's very significant, 29% per year. But you know what? This client we have lost money with Peter Lynch because when things were up and things looked glorious, he invested a bunch of money in. And maybe for a year or two, things kept going, and then things dropped out the bottom. Lynch was down 40% or 50% or whatever, and our client sold, sat in cash, and then saw Magellan Fund start back up, start way back up, way beyond what he sold out for, kept going and going, and he began to feel really confident about it again, so he put his money back in, watched it continue to go up, and then it turned, and it started back down, and went down, and went down, and went down, and he sold out. Twice he sold out as it was down, only to get in when it was high. It's that old saying. Most investors know they should buy low and sell high, but what they do is they buy high and sell low, locking in those losses.
Like I got a friend, a really astute guy, and he was playing in and out of Home Depot in the 90s. And we were talking, we had this long conversation about stocks. And he said, yeah, I had Home Depot in the 90s and I bought it and it was $30. It'd go up to 40 and I'd sell it and it'd drop and I'd buy it back again. It'd go up to 40, 42. And he said, Al, he said, if I had just bought it at 30 and held it to now, I would have made a heck of a lot more money trying to get in and out of the position every 2 months or 3 months, trying to squeeze out, 5 or 10% on the stock.
That's where we are at AFC. We're invested 100% of the time because we realize the risk is being out of the market, not in the market. And there have been any number of studies that have been done. There's one that was published in Yale's stock almanac. I forget what it's called. Hirsch.
You're talking about the traders
stock traders almanac.
Stock traders almanac. Yep.
And they publish a table in which they show if someone invested $100,000 and kept it in that $100,000 over that period of time from 1999 to 2018 would have been worth $320,000. But if they missed just the best 10 days, the return dropped to 2.01%. Now remember, 1999 to 2018 means you went through the Great Recession and you went through the dot-com bust. Two dramatic times when the market was down 30%, 35, 40%. So if you were fully invested, I said it was actually 298,000. Annualized performance was just 5.62%. Not bad, not terrible. But if you missed just the best 10 days, your performance dropped to 148,000, and that's missing the best 10 days out of 20 years. 1 day every other year. If you missed the best 20 days, an average of 1 day per year, you had a loss of 3%. If you missed the best 30 days, you had a loss of 2.5%. If you missed the best 60 days, your 100,000 turned into 21,000. Yeah, the converse is true. If you can miss the worst days, you do much better than being in the full time. But that's guessing what are going to be the worst days. By staying in the market, you achieve a very, very good return. We're taking a very difficult time.
And the other thing, Mike, is that a lot of people don't realize, because that's the argument people will make when I use that chart about missing the best days in the market. Well, what if you miss the worst days? Well, yeah, that's true. You will make more money. However, the best days and worst days are clustered so close together. Yeah. Good luck in trying to pull them apart.
Yep.
It's like trying to pick the marshmallows out of your Rice Krispie treats. Good luck. You can't do it. But if we take and look at the greatest investor in the world, Warren Buffett's 58-year track record, and he believes in staying best. Him and Charlie believe in staying invested for the long term. You're going to compare invested compounded against the S&P 500 total return, which had 9.9 over his 58 year. You'd have a return of 24,708%. His investments, 19.8%, 3,787,464%. Which one would you rather have?
Say the figures again.
So the S&P 500 total return since his inception of 1965 to 2023, the S&P total return is 9.9% for a return of compounded over that time 24,708%.
Yep.
Warren Buffett's return is 19.8, about 10% better, for a return of compounding gains of 3,787,464%.
Which would you rather have?
Yeah, which check would you rather have?
I'd rather have the 9% because it's safer.
Yeah.
I don't think so. I mean, the issue is it's really difficult during a time of 2022 when things are down and you get discouraged. But we've been in a bear market. We were in a bear market for 18 months. That's not a very long period of time.
No. And other investors, great investors, John Neff was one from 1965 to 1995 when he retired. He averaged about 3.5% above the S&P 500. $10,000 invested with the S&P 500 and would have been like, I forget, it was like 407,000. With him, it was over 557. You'd have another $150,000-$60,000 in your account. So staying invested, staying long term, picking good companies. That's what we do. We pick good companies and we stick with them.
We're looking for focused investments. Those companies which can grow 10-fold or 15-fold. We're not looking at companies to hit singles. We are looking for the home run type companies. And there's a lot of them out there. And the risk is not that great.
And we mix in some doubles and triples too.
Yeah.
But the thing is, Mike, we started the program talking about India and talking about opportunity. And you mixed in talking about science and the economics and saying that, economics is not a hard science. You throw the ball up in the air, physics, it comes down. Economics, you throw in a yield curve and raising interest rates, and we should have a recession. We don't. The ball doesn't come back down. And that's the goal of this program, is that to tell you that how we do things and why things don't always add up, and what you think you see is not necessarily what's true.
And what you hear on TV, what you read in journals. I mean, if you listen to CNBC, they're talking about buying treasuries instead of stocks. Have they not looked at the market? I mean, it's just sometimes it just blows me away, and I have the TV going all day long to listen to CNBC.
I bounce around between them and try to figure out, it's funny to see who's saying what.
That's crazy. Anyway, that's what our focus is to keep you ahead of the curve, to keep a different approach than you hear from anywhere else, and to give you the insight as to what and why we actually outperform the Standard & Poor's 500 over the long term. And for each of our clients, we write that into the contract. Know of any other financial advisor that writes that in? No. They sure make sure they get their fees, but they don't talk at all about their performance. Have a great week and a weekend, and we'll be back next week.